Hello, everyone. I'm Charles Elwis, CPA, a certified tax resolution expert. My team, comprising former IRS agents, fellow CPAs, and tax attorneys, and I help people nationwide resolve tough IRS issues. Today, I want to talk about something every taxpayer should be aware of: the IRS levy. When the IRS places a levy on your property, it isn't a random action. It's one of the most serious methods the agency uses to recover unpaid taxes. Although millions of tax notices are sent out each year, a levy only happens after all other collection attempts have failed. If you've received a levy notice, or if you suspect you might, here's what you need to know. An IRS levy is the legal seizure of your assets to settle a tax debt. It differs from a lien. A lien is a claim on your property, whereas a levy actually takes your property or its cash value to pay the debt. There are several forms of IRS levies. For example, a bank account levy occurs when the IRS instructs your bank to freeze your funds, and after a 21-day waiting period, those funds are sent directly to the IRS. Wage garnishments require your employer to withhold a portion of your paycheck and forward it to the IRS. Property seizure can include real estate, vehicles, valuable collectibles, and even investment accounts. Federal law does protect certain items needed for basic living, but if your tax debt is substantial, almost every asset becomes fair game. The authority for an IRS levy comes from Internal Revenue Code, IRC 6331. Once a tax lien is filed and back taxes remain unpaid, the IRS can seize nearly all your assets that aren't legally exempt. Consider how a bank account levy works. First, the IRS notifies your bank to levy an amount up to what you owe. Your bank then freezes those funds immediately. You have a 21-day period to resolve your tax issue or negotiate with the IRS. If no resolution is reached during this time, the bank transfers the frozen funds to the IRS, which can put you in a difficult financial situation. Before any levy begins, the IRS is required to send two critical notices: the notice and demand for payment, detailing the amount you owe; the final notice of intent to levy, along with information about your right to a hearing, sent at least 30 days before the levy starts. It is essential not to ignore these notices, as they present your opportunity to request a collection due process hearing and discuss alternatives, such as an installment agreement or an offer in compromise. The IRS can levy various types of property, including bank accounts, checking, savings, etc., portions of wages or Social Security benefits, real property, such as your home or other real estate, personal property, like cars, jewelry, and valuables, investment and retirement funds, including stocks, bonds, and IRAs. There are ways to prevent or stop an IRS levy. Paying the tax debt in full immediately halts the levy process. Establishing an installment agreement shows good faith and may stop or release a levy. An offer in compromise might allow you to settle for less than the total owed if you meet the required criteria. Demonstrating financial hardship can persuade the IRS to release a levy. Innocent spouse relief might be available if the debt results from your spouse's actions. If you're facing IRS tax problems, know that you are not alone. My team and I specialize in providing efficient, effective solutions to challenging tax issues. I'm offering a no-cost, no-obligation tax settlement consultation to help you regain control of your financial future. Remember, prompt action is key to stopping or preventing an IRS levy. Stay informed, stay proactive, and let us help you overcome these challenges. Thank you for watching.